5 stocks under $5 to watch. That is exactly what we're discussing here today, guys. These videos are always kind of fun to make. Some of these little speculative companies that are $5 and under, because usually we talk about the Apples, the Googles, the Amazon, Nvidia, Facebook, a lot of these big companies. These are the ones we usually talk about, right? And for good reason. They've taken over the world. They're continuing to take over the world. They make billions and billions of dollars in profit. They deserve to be talked about a lot, right? But every once in a while, it's fun to talk about some more speculative names. And with that being said, guys, just realize any stock that's $5 or lower, generally speaking, it's there for a reason, okay? Sometimes it's because their revenues have fallen off a cliff. Sometimes it's because they're not profitable. Sometimes it's because, people just don't believe in them. Wall Street doesn't believe in them. Sometimes it's because they have yet to prove themselves. They might have a lot of exciting things coming, some research and development things, but they haven't really proven anything, guys. So this is something you kind of got to think about going into any of these stocks before you ever put a dime in them. And also, keep this in mind. These companies are all very speculative, right? Anything under $5 is highly speculative. So make sure, if you do ever invest in stocks that are under $5, make sure you do so with a portion of money that is very small in comparison to your portfolio. These stocks could potentially increase your wealth, right? They could potentially increase your wealth, and these could be the next big company that, turns it around, or they're things the next big thing, right? And they become a huge corporation. But at the same time, guys, some of these companies could be out of business someday. Some of these companies aren't profitable. They aren't for sure going to be around and things like that. So you've got to take that into account. Just make sure if you ever invest in any company, whether it's one of these I'm mentioning here or any company in the future, just make sure, guys, you've got to kind of think about what's the risk involved with this whole deal, guys. So I hope you enjoy this. Make sure if you're new to the stock market, you check out my stock market investing mastery course. There's a first link down there in the description that goes into exactly everything that I look for in an investment. First link down there in the description. Check it out after this is over. First stock is Patriot Technologies. This is, of the 5, this is the most speculative of speculation here, guys. This stock is actually up around, it's nearly doubled in the past 3 or 4 months, okay? Ever since the Las Vegas shooting here that happened, unfortunately, back in October, ever since then, this stock has blown up. And the reason is this company has had some technology that could have maybe prevented that entire shooting, guys, and could prevent like so many terrorist attacks and things. So this company is run by Martin Cronin, right, at Patriot Technologies. I was watching a Fox interview recently with him after the Las Vegas massacre happened, right? And they have what's called a PET scan technology, okay? So basically this technology, these scanners, right, they can be behind walls. No one could even know they're there, right? And they can be scanning people's bodies while they're walking by, okay? So it's not even like they have to get patted down or something like that. People might not even know it's there, right? But it checks your body, and it can, you see if you got a firearm on you or something, or maybe you got an explosive in a backpack or something like that, guys. And right now in that interview, he talks about how they're actually testing with one of the resorts out here called Westgate, right? They're testing a lot of this technology, okay? So it's very interesting technology, because you think about somewhere like here in Las Vegas, right? No one wants to go everybody walks around and goes to different hotels all throughout the strip and whatnot. Last thing you want to do going in there, right, is have to get patted down by security and have to get your backpack checked and all this kind of stuff, right? You're having fun, you're having a good time, you're drinking, you're having a blast, right? Last thing you want to do is imagine if everywhere you walk to, every other resort, you got to get patted down. Like that just totally dampers the mood, right? That just totally dampers the mood. So with a technology like this could be, in airports all over the place. This could be in resorts and all kinds of things like that, guys. So very exciting technology, but the business is not proven yet. They basically have almost virtually no revenue. They're testing all the equipment out at Westgate right now. But it has huge potential, potential revenue down the road and profits down the road if they can roll it out themselves, or they could potentially license this to a bigger company, right? And just kind of take licensing fees off of all this, because they got a lot of patents on a lot of this technology, right? Hard stuff to come up with, right? Then how I actually found out about this is I was on a conference call. If you guys know, one of my biggest investment is Wynn Resorts, right? Wynn Resorts. So they were in the November conference call. It was October, November, right? They asked Steve Wynn about the massacre and whatnot, and they kind of got into like some security stuff, and Wynn starts explaining a lot of the security they have in the Wynn properties, right? And then all of a sudden he starts talking about some of this technology here, right? He never mentions Patriot 1 Technologies by name, but basically the technology he was talking about, where people might not even know it's there, it's behind walls or whatnot, that could scan people's bodies, identify if they have a firearm or an explosive or anything like that. When he was talking about it, it was basically the same exact technology this company has. And it was so crazy because in that conference call, he goes like, and this is not an exact quote, but it was something like this: hey, and any of you stock pickers out there, you might want to look into this. And I thought he was talking to me. I'm like, does he know I'm on this conference call right now? So very interesting company, highly speculative right now because they basically haven't proven themselves as far as revenue and profits and those kind of things, but some really interesting technology that could be huge. Keyword is could be, guys. So that's the first one. That's the most speculative of all these. Number two is probably the second most speculative out of these. I don't even know how to pronounce this company's name. TransEnterix, I believe it's called, right? I found this one a few months ago, and in the past year, it's up 41%, so it's done pretty good so far. So TransEnterix is a medical device company focused on the development and commercialization of surgical robot systems, okay? Similar to like an Intuical Surgical. I don't know if you guys know that company. It's become a massive multi-billion-dollar company now, which basically have robot systems that do surgeries and whatnot, okay? So this company has pretty much no revenue as of yet, but that's because some of their systems just got allowed in, okay? So 2017 was a transformational year for TransEnterix that included the commencement of the U.S. Senhas commercialization and progression toward the global commercialization of the Surgery Bot is what their like little robots are called and whatnot. They can do surgeries and whatnot. So this company is starting to actually sell these now, okay? So during the quarter ended December 31st, 2017, the company sold 2 of these Senhas systems for a total revenue of $3.3 million. So basically they run for about $1.6 million for each of these, right? Total 2017 revenue is approximately $7 million, a 360% increase over 2016, okay? Representing a total of 5 Senhas systems they sold, including 2 to Europe and 2 to Asia and 1 to the United States here, all right? So their balance sheet, they still have some cash on there because they're burning money right now. They're losing a lot of money, obviously, because they're just kind of getting their thing going, right? So as of December 31, 2017, the company had cash and restricted cash balance of approximately $97 million. The company believes that the capital is sufficient to fund operations through 2019, supposedly, okay? So something to keep in mind with a stock like this is they're going to probably need to raise funds later on down the road, okay? This company's probably going to need to raise funds. However, they should be able to get that funding as long as they can keep proving that the revenue is going up. If this company all of a sudden goes from, they did 1.5 million in 2016, okay? They do 7 million this past year. If all of a sudden this upcoming year they do 15, 20 million, right? And then all of a sudden the next year they do 40 million, you know, banks are going to look at that as, wow, this company's really increasing, they're worthy of giving a loan to, okay? Or venture capital or private investors, whoever, to kind of get them through the times until they get to the profitability on the other side, guys. And the hope for a company like this is maybe they can become half of what Intuitive Surgical has become, right? Their stock is up around 7,000% from about 2000 to about 2016. The stock was up around 7,000%, guys. So there's maybe hope that maybe this company could be half of that someday or something like that, guys. So exciting things going on. Obviously, a company is going to be able to probably increase revenues huge, but at the same time, they probably won't be profitable for quite a while. So that's something to keep in mind there. Blue Apron Holdings. Okay, this one went public, and since it went public less than a year ago, guys, less than a year ago, this one went public, right? It's down almost 70% from where it went public at, okay? So Blue Apron, basically, they have a system where you can go and you can make orders and you kind of pick out what ingredients you want and whatnot for your dinner, and you can kind of choose from all these different things chefs have and whatnot, and it basically gets delivered straight to your door. The plans start at $8.99 per serving. You know, so it's an interesting company, okay? They're in an interesting space. I mean, I don't see the reason why I would do something like this, but a lot of people do, okay? So net revenues increased 3% year over year, while marketing spend decreased 31%. The revenue only increasing 3% was kind of looked at as not a very good thing for Blue Apron. Subsequent to the third quarter, Blue Apron completed its most recent product expansion to all customers and fully transitioned product volumes to its newly launched East Coast Fulfillment Center in Lynn, Linden, New Jersey, which is a huge fulfillment center that's supposed to be awesome for them, right? But this company's losing a lot of money right now. Adjusted EBITDA for the quarter was a loss of $48 million, guys. They took a loss of $48 million, and that was the year prior, they lost $34 million, so they're losing even more money now, okay? And there's even worse news here. So customers decreased by 6% year over year and decreased 9% quarter over quarter. The good news is average revenue per customer came in at $245 in the third quarter. That's compared to $227 in the same quarter last year. So at least customer spend is going up, but unfortunately they lost with a lot more customers than they gained, basically, okay? This company does have $266 million in cash, so you should be able to get it through for a certain amount of time until maybe they have to raise funding or whatnot, unless they can miraculously come to be a profitable company. I'm not sure when you're taking $48 million losses, guys, in a quarter, not sure you're anywhere even remotely close to profitability, so they're probably gonna have to eat in that cash balance. However, it's a super lower valuation. Like if you look at what the valuation was just at this time last year, right? It was dramatically higher. So you're getting this company for a way lower valuation at this point. The question is this a type of company that's kind of, got too much competition right now? Is this an industry that is serious for the future? Is this an industry that maybe an Amazon could come in with Whole Foods brand and take them out? Things like that. So there's a lot to be worried about, but at the same time, there's some things to be excited about because it is a growing space they're in with this whole thing where people like to, place orders and have the food delivered straight to their house and they just cook it up there. Those kind of things. So there is some excitement there. You just got to ask yourself, is this a one that can make the bounce back over the next couple years, guys? Pandora is the next one up here, guys. It's a $4.37 stock. A lot of you guys probably listen to Pandora. I listen to Pandora a decent amount, not nearly as much as I used to back in the day, but I still listen to it. So Pandora, CES, the CEO was there, and I was just watching an interview recently with him on there, and he was kind of talking about Pandora and the competition they have from Apple and Spotify. Since I got an Apple Music account about 6 months ago, I listen to Pandora far less than what I used to, because now I just listen to music on demand. But this is a company that has the revenues trending in the right way, right? They did $920 million in 2014, then they did $1.1 million in 2015, almost $1.4 million in 2016. But on the flip side here, guys, look at net income. It's just getting worse and worse. They take a $30 million loss. Then they take a $169 million loss. Now they took a $342 million loss, guys. These are massive losses this company's taken. But here's the thing, guys. There's a company with a market cap now of about $1 billion, okay? So you can buy the whole company for about $1 billion, okay? And remember, they have revenues that are higher than $1 billion right now. They're just losing a ton of money. So when I look at a company like Pandora, I kind of think if you're getting in this stock, it's kind of like your thought process almost has to be around an acquisition. That's a risky thing because an acquisition might never come, okay? But at the same time, like it's a company that I could see some companies potentially acquiring. Like in my opinion, if I was Google, I would absolutely buy this company. What are you going to have to pay for it? $1.5 billion? That's like buying a can of soda for Google. Like $1.5 billion is nothing, okay? And when I think about how easy Google platforms are to advertise on and whatnot, and how much that could help a company like Pandora. Pandora right now, you have to fill out a form and then hope they get back to you as far as trying to advertise on Pandora and whatnot. It's very difficult, right? Google has such an easy system because I could go in right now and create Google ads right now, and it's so simple. It's so simple, and it doesn't matter if my budget's $10 or my budget's $110,000. I could create ads around that, and it's so simple on my computer, right? Pandora doesn't have something like that right now. I think it would be an interesting acquisition target for maybe someone like a Google, maybe even potentially someone like an Amazon, so they can integrate that with their Amazon Echoes very easily and things like that. Maybe Apple, but I doubt Apple really needs them because Apple's having so much success already in the music game. I doubt Apple would even be interested to buy Pandora, even if they were selling for $100 million, just because Apple has so much going on already. You never know, could be happening, but I don't know. So Google, Amazon possibility. As far as Pandora as a standalone company, I'm not sure they'll ever be able to be profitable. I'm really not at this point in time, guys. So much competition in the space that I'm just not sure. Next one up here, and this one's over $5, unfortunately, Groupon. It was just recently, when I prepped the video, it was under $5, right? But just in the last 3 days, this one's went up nearly 11%, which has basically made it over a $5 stock, but we're still keeping it in there, guys. So Groupon recently, over the past few years, has had trouble really growing revenue, okay? They've had trouble growing revenue. They've kind of been stuck around this $3 billion number for a few years now, and it's not much going on there. Also, they've taken, pretty big losses. Like last year, for instance, 2016, they took well, I guess that's 2 years ago now, because now we're in 2018, but they took a $200 million loss, guys. They took a $200 million loss. However, there's some hope for this company, okay? Just in this past quarter, they actually had a positive net income, guys, and there's a possibility that in the December quarter, it can be even more positive. So maybe this is a company now that's starting to get to a place where they can be profitable, okay? That would be huge for Groupon, because it's a company that's historically just not a profitable company, and they're kind of stuck around this $3 billion revenue number, and it's like, okay, so you can't really grow, you're not profitable, what are we buying here as shareholders? So maybe there's something here with the fact that there's going to start being profitable more than likely. $891 million in cash, okay? $141 million in long-term investments. And then if we look at the debts, only $178 million. So Groupon has always had a phenomenal balance sheet, and they still do to this day. So might be an interesting one to see if they can start becoming more consistently profitable and put together a nice consistently profitable year, like a $50 million profit net income, $100 million, something like that, and maybe something to build on there. So anyways, I hope you guys really enjoyed this today. 5 stocks under $5 to watch. Very interesting stocks. Let me know if you have any interesting ones that are under $5 that you think people should check out. I would love to hear from you guys in that comment section. Don't forget, if you're a beginner in the stock market, check out my stock market investing mastery course. It's an 11-part course. First link in the description down there that goes into everything I look into investing in a stock. Thank you for watching, guys, and have a great day.